This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Businessweek Daily with Carol Massar and Tim Stenovec, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody, across Bloomberg platforms. Yes, indeed, this is Bloomberg Businessweek Daily. It is Monday, March 16th, 2026. Carol Massar along with Tim Stenovec live here at Bloomberg headquarters in New York City. We've got the U.S. war on Iran. It is entering its third week. We're also got that Fed decision on Wednesday. I feel like there's a lot. There's a big thing going on with Nvidia right now, a big
GTC
event on the West Coast.
Yeah.
Right? We've got Micron earnings also coming our way on Wednesday. There's just a lot percolating right now, although I think it's safe to say energy markets and that war still front and center.
Yeah, on energy markets, WTI crude lower after hitting $102 per barrel. Right now, WTI at $94.31 a barrel. Brent still above $100 a barrel, but Carol, WTI down about 4.4% today.
Yeah, and markets, I mean, if you look at the major averages, they're green across the screen, and you've got more names in the S&P 500 higher today. Having said that, we're definitely off our best levels of the session, as you said. We're going to get more on the trade in just a moment. Also ahead in the next 60 minutes, who would want to be a U.S. ally in 2026? So asks Bloomberg Opinion's Marc Champion. We're going to head over to London in just a moment and check in with him.
Yeah, plus hyperscalers, shadow borrowing, maybe bolstering private credit risks. That and the macro environment. Alberto Gallo of Andromeda Capital Management joining us a little bit later.
We're also going to talk markets with the U.S. head of international wealth and private banking over at HSBC. She says we are looking at the year of value. Although when it comes to value, I get it, but we've heard people say that a lot, but maybe something's different this time around.
And we hear from Melinda French Gates a little bit on leadership and on egos.
All right, they often go together. So we're going to get into that in just a moment. First up, let's get a check on the trade on this Monday. Here is Charlie Pellet.
Thank you very much. Higher across the board with the Dow, the S&P, NASDAQ, all in the green. Crude oil retreating. As Tim mentioned, right now we got a barrel of West Texas Intermediate back below 95, 94.47, down 4.3%. Brent crude, 101.14 right now, down 1.9%. The Dow, the S&P, NASDAQ, all higher. S&P up 64 at 66.96. That is a gain of 1%. The Dow up 349, now up 0.7, while the NASDAQ Composite Index is up 270. For NASDAQ, a gain of 1.2%. The 10-year at 4.22%, with the 2-year 3.67%. And right now, we do have West Texas Intermediate crude down 4.3%. WTI 94.53 a barrel. Should not ignore the move in gold today. Spot gold below $5,000 at $49.95 right now. Spot gold is down 0.5%. Among oil majors, ExxonMobil shares higher, along with the price of crude up 0.6%. Chevron up 0.1%. ConocoPhillips down now by about 0.1%. Recapping, S&P is gaining 1%. West Texas Intermediate crude oil down 4.3%, 94.43 a barrel. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Well, U.S. allies deflecting President Trump's demands to help reopen the Strait of Hormuz, expressing unease about getting pulled into that war, U.S. war in Iran. President Trump spoke about it less than 2 hours ago from the White House.
Their capacity to threaten commercial shipping in the Strait of Hormuz, with more than 30 mine-laying ships destroyed. So we want them to come and help us with the Strait. We have it in very good shape. The numerous countries have told me they're on the way. Some are very enthusiastic about it, and some aren't. Some are countries that we've helped for many, many years. We've protected them from horrible outside sources, and they weren't that enthusiastic.
That, of course, is President Trump at the White House earlier today. Well, the U.S. request for a NATO assist comes at a time when Bloomberg Opinion's Marc Champion, who covers Europe, Russia, and the Middle East for us, writes about how essentially U.S. allies can put a high price on helping out the United States in the Strait of Hormuz. It's all about maybe being in the driver's seat a little bit.
Maybe.
Maybe. This is what we want to hear from Marc about. Hey, Marc joins us right now. Marc Champion, that is, from London. Marc, it is good to have you here with Tim and myself. After a year where President Trump seems to have had the edge on U.S. allies on a lot of different fronts and situations. Have the tables turned a bit here, and are U.S. allies a little bit more perhaps in the driver's seat?
Well, it's not, they're still dependent on the US for security. There's limits to what they can do. But the point is that here is an instance where, when he says, this is a NATO, NATO needs to respond, NATO doesn't need to respond. NATO has a defense clause, collective defense clause, and it's been invoked once on behalf of the U.S. When it was attacked on September 11. This is not a war of self-defense. This is a war of choice that the U.S. made. It wasn't attacked. It decided to attack Iran. There's no automaticity here. There's no, and basically this is a case where Donald Trump needs some help. It isn't often that the U.S. needs military help. But this is one instance where the U.S. is pretty stretched. It's got two, carrier strike fleets in the Gulf. They are very busy attacking Iran. And it isn't actually militarily very easy to sort of split that out and begin an operation to protect shipping on its way through the Gulf. Also, some of the countries that he's asked, the UK, France, Japan, South Korea, these are countries that are actually pretty good at demining. So if the Iranians have demined, they have the kit, they have, drone demining equipment, which is what you want in a conflicted zone like this. But the point is that, because he needs them, it isn't just about raising the oil. Controlling the oil price. So that's why you want the straits open. But he needs it because that is where the war is being fought. He needs it in order to win the war. And so they should do what Donald Trump would do, which is to say, okay, if you're going to ask us to put our ships and sailors at risk, then we have certain conditions and we have a price.
What would the price be? What would the conditions be, in your view, Marc? How would Donald Trump handle this if he were on the other side?
Yeah, so there are things that different countries will want. I would say that there are two overall things that they should be asking for. The first is for to make it for the Americans to understand and to make it clear that this is a non-American operation. In other words, to be able to separate this and be able to say we are not joining the war effort. We are operating a non-U.S. effort in order to keep the international waterways free and to keep shipping safe. The Iranians will see this as an intervention because they are, trying to keep the straits closed. But nevertheless, this is a war that, may not suddenly, end from one day to the next. It may drag on in different forms for some time. And it will be important for allies who didn't want to be the part of the war and don't want the consequences to be able to sort of make that difference and to include other countries, that aren't necessarily the usual suspects of Western allies and so on, in order to take part. So that's one thing they can do. The other thing that they can and should do is to tell him, look, we know that you're not that keen on helping out Ukraine. We need Ukraine helped. You haven't been, the difference between the Trump administration and the Biden administration in terms of helping out on Ukraine is pretty stark. So, we have a minimal demand to make, and that really should be that the U.S. continues to provide Patriot missiles, which will be at a premium after this Gulf War because of the rate at which the Gulf states have been burning through them, and the U.S. bases have been burning through them.
Hey, before we go, Marc, just one last thing that this really jumped out in your column that's on the Bloomberg today. You remind us that the worst hit countries have been America's allies in the Persian Gulf specifically. And you say the Trump administration's failure to prioritize Gulf allies will have a long tail, prompting a reassessment of their security policies. But for now, they need the Hormuz open too. Just real quickly, 30, 40 seconds, what might be the implications there?
Yeah, I mean, I don't have a crystal ball to say how it will fall, but there's no question that the Saudis, the UAE, the Gulf states collectively, that they are going to be looking at their situation and saying, we host these US bases in order to make us more secure. They made us less secure. So, what are we going to do about that? And I don't know that they would know the answers at this point. I certainly don't, but they will be looking at it.
All right, going to leave it there. So appreciate it. We know it's later over there in London. Marc, thank you as always. Marc Champion's columns, I got to say, must read on the Bloomberg. So highly recommend you check them out on the Bloomberg and at Bloomberg.com. Marc, by the way, international affairs columnist for Bloomberg Opinion, again, joining us from London.
All right, so that's one view of everything happening right now, at least when it comes to what could affect markets. Another view has to do with investment in AI infrastructure via off-balance sheet debt, increasing the exposure of insurers and private credit funds to hyperscalers. That's according to officials at the Bank for International Settlements. So we're talking about hyperscalers turning to off-balance sheet arrangements to finance infrastructure expansions, often in partnership with private credit firms, strengthening the links, Carol, between hyperscalers and non-bank investors.
I got to say, this really fits into something you and I have been talking about so much, and everybody at Bloomberg really, is what's going on with private credit. Curious to see what our next guest has to say. He is Andromeda Capital Management's Chief Investment Officer and co-founder. He is Alberto Gallo, and he joins us from London as well. They have over 300 million in assets under management. We were just talking with our Marc Champion in London. Alberto, I do want to talk about private credit and what's going on, but first up, you are joining us from London. Marc has often weighed in for us and our other colleagues overseas about the U.S. war in Iran. How do you see investors and market participants from there and from who you are talking to, how they see this war?
So I would say that the war is seen still very optimistically by the majority of investors. So a lot of investors expect a taco moment that would translate this into a very muted conflict in the next few days. But on the ground, the signs are suggesting that it could last a lot longer. And even if there is a ceasefire, we could go back to a situation which might be quite different from what we had before. So oil might not go back to 60, and we will still have tensions in the Middle East and some disruptions to supply chains. Now, if you put that in context, we were starting the year with a very, very close consensus on growth and disinflation. So very optimistic outlooks, Goldilocks outlooks for 2026, the opposite of what we had in 2025. And in this context, we had extremely tight valuations in credit markets, 30-year tights in spreads at the beginning of 2026. And together with all the signs of froth that we saw in the private credit market, these made us really cautious about credit. We were already last year, but it made us even more entering this year.
What's made you even more cautious about credit this year? How has the situation changed?
If you think about valuations, that's a fact. But then there's a number of other signs that you can put on a checklist, which, you can call it, this time is different, circularity, conflict of interest, investors ignoring risks. And all these elements typically tend to happen before, just before something goes wrong. You don't know what the catalyst is going to be. The catalyst could be the war and therefore higher commodity prices and central banks not being able to cut as much or even having to hike. That's what the market is pricing for Europe. But when the credit market is priced for perfection and investors are ignoring risks, then it's time to really, start being defensive, looking for the weakest catalyst, the weakest link in the chain. And we mapped the private credit system since over a year ago. We saw all the elements of risk, overlooking risk of very loose underwriting, which are now translating in a big, discovery moment from investors. And we're just at the beginning of this. This has been a multi-year, $3 trillion trade that coincided with the AI capex. Now, the AI capex is the second largest capex effort in U.S. history after the annexation of Louisiana. And, at the same time as software companies were looking for funding, private equity managers were looking to expand in the credit space, and they started lending to any borrower to gain market share out of banks. And so this has created a very large amount of misallocation of capital. 40% of the companies in private credit are software, 40% is negative free cash flow, so they don't generate enough cash, and 10% is pay in kind. So they don't have enough cash to pay coupons, but they pay principal instead of coupons.
Okay. Doesn't sound like a very good scenario, to say the least. How does this, though, we've had a lot of guests on, Alberto, to talk about this, and many seem to say that it isn't systemic. There's not a lot of tentacles in kind of, the traditional financial system, although big banks do have exposure. So, we are talking more about kind of the insurers and what their exposure is. How do you, as you continue to look over this and do your analysis, maybe see where does it go? How bad does it get? And how problematic does it get more broadly for our financial system? And how long does that take?
The response today is that it's not systemic. A few months ago, the same analysts were saying it's not a problem, or it's just one manager, for example, Blue Owl. But the size of the market is over 3 trillion. Subprime was 1.3 trillion in 2008. So it's a comparable size. Now, the spillover effects are different. It doesn't go through the banks.
Yeah.
Banks this time around have been very, very, severely regulated. Regulators have been, with their magnifier over the bank balance sheets for the last 3 years. And for the last 10 years. So it actually goes into a different contagion channel. And it's almost, it does look like the 2007, 2008 credit situation. There's a lot of leverage, there's bad underwriting, but in a way, it's a different contagion channel. So it goes through the insurers. These are the biggest buyers of private credit assets. Now, remember that loans are not securities, so they're not regulated by the SEC. If you do a bilateral loan or private credit fund does not buy or hold securities. And insurance regulators are very often at the state level in the US. So to some extent, you can escape mark-to-market, you can escape the SEC, but when you start having defaults, like with First Brands or Tricolor, you cannot escape investor outflows. So a lot of the 3.5 trillion of private credit is owned by insurers. The private equity own the insurers, so the ones that are owned by Apollo, KKR, and so on, are around 1 trillion. And the total of the US life insurance industry is 35 trillion. Now, you could say, yes, a lot of these collateral is investment grade, but we know that ratings tend to be very cyclical. And a lot of these collateral is actually rated in the BBB minus space. And when we look at the portfolios and the data and the concentration in sectors and the fact that a lot of companies don't have free cash flows, it all looks very fragile.
Yeah.
So if you want to get exposure to AI, probably lending a 2-3% spread is not the best way.
Yeah, and it's interesting when you talk about the insurers and the big kind of private credit, private equity firms that have the insurers that are there to be basically a buyer of these private credit. To me, it gets back to
circular.
She's
doing a circle.
It's a little bit too close for comfort, some would say. So glad we could get some time with you. We feel like this is such an important issue as we continue to track it, and hopefully we can continue to have this conversation with you. Alberto, thank you so much. Have a great week.
Thank you. Good luck.
Alberto Gallo of Andromeda Capital Management, CIO and co-founder, joining us from London.
Coming up next, Jensen Huang speaking this hour, what you need to know, along with reporting on Meta, OpenAI, and more. Ed Ludlow, next on Bloomberg.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. A slide in oil prices is lifting stocks and bonds on hopes that more tankers will be able to get through the Strait of Hormuz. Right now, the S&P is up 75, 6707 where we stand. That is a gain of 1.1%. The Dow up 420 now, up by about 0.9%. And NASDAQ is up 308 for the NASDAQ Composite Index, up by 1.4%. The VIX below 24 now, now, very close to 23. We've got the 10-year, 4.22% with the 2-year, 3.68%. All of this ahead of the Fed meeting that begins tomorrow with a decision on Wednesday. Spot gold is trading below $5,000 the ounce, $49.97. Spot gold down 0.4%. Crude, major move there to the downside, dropping 5%. WTI right now at $93.83 a barrel. Brent just above $100 a barrel, now down 2.6%. Bank of America has agreed to settle a proposed class action lawsuit on behalf of Jeffrey Epstein victims who accuse the bank of aiding in the deceased financier's sex trafficking. Shares of Bank of America are trading higher today. Right now, we do have Bank of America, BAC on the ticker. It is gaining by 0.9%. Warner Brothers Discovery shares higher after one battle after another. Took home the Best Picture prize last night at the Academy Awards, delivering a long-awaited win for veteran filmmaker Paul Thomas Anderson. Shares of WBD Warner Brothers Discovery up by 1.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Well, as you know, at this hour, NVIDIA CEO Jensen Huang speaking at the company's annual AI conference. It's a big deal. It's 4 days. It's called GTC. It's out there in San Jose.
Yeah, NVIDIA executives likely need to deliver surprise to spark a rally in the stock. It's essentially treaded water amid concerns that the rapid revenue growth is peaking. Not even a banner earnings report last month was good enough to impress investors. The shares fell 5.5% the following day. With more on NVIDIA, let's get to one of the co-hosts of Bloomberg Tech on Bloomberg TV. He's Ed Ludlow. He's in the Bloomberg News San Francisco bureau. Ed, you were at this event in San Jose last year. You were at this event in Washington, D.C. earlier this year. It's like the kind of like the two a year they do. What's different about this one?
Gosh, I don't know that it's any different in practice. You guys set up the ramifications for the markets really well. That Nvidia, as the most bullish on the street would put it, really is searching for its next catalyst, right, to propel it forward. You know, the state of play is that Nvidia dominates. It has a literal and technical monopoly on the market for chips that train AIs and run them on the inference side, and those chips go into data centers. And one of the things that you kind of hinted at was that it's not the only event that they do. So when they had the DC edition of this last year, the big piece of news was forward-looking guidance, $500 billion of sales, $500 billion of sales, just on two platforms, Blackwell and Rubin, through the end of calendar 2026. And already so far this year, Jensen Huang has indicated that they're tracking beyond that. And so the market is just waiting for that number to go up. And that pretty much will judge, the response will be judged by that.
Okay. Kind of sounds...
What have you done for me lately, Jensen? It's kind of like what investors want to know. I mean,
I don't know. It doesn't sound as exciting as we've heard in the past, but it's but important, right?
Well, no. Let me take you inside the room. I'm not there right now. I'm going to go tomorrow down to San Jose. You know, it's thousands and thousands of people, from developers, which is its history as a developers conference, through to venture capitalists, all of the AI companies that are building on top of NVIDIA gear. There is no adequate superlative for it. It is the Super Bowl of AI, and Jensen Huang, as some call him, the godfather of AI, and that is true, that they kind of go on this pilgrimage down to San Jose to see him. But the bar is higher now in terms of what's material for the stock. And, we're talking about the world's most valuable company that between 2022 and 2024, the stock jumped 800% anyway. And people had come accustomed to that kind of trajectory higher. And that's the bit that's in doubt at the moment, what it would take to move the stock even higher at that kind of a gradient or ascent. Yeah,
I mean, the company... or the market, I should say, is not necessarily maturing in the traditional sense. But I mean, Ed, you can't grow like that forever. What about the inference layer versus the training layer and the opportunity there? Because that could be an area of growth. But there's also competition.
The academic debate has been that GPUs were very good specifically for training. A GPU can run multiple data processes in parallel, and that's why it was good for training. Inference, running an AI model, generating tokens, there is an academic school of thought that says, having a chip specifically designed for that is better. And you see AMD make the case that its platform is best for inference. You have inference-specific platforms like Cerebras, or companies working on their own chips that have a much more narrow focus, like Google's TPU. Now, Nvidia, towards the middle of last year, acquired a big chunk of Grok with a Q, and hasn't really told the world what it's done with that. What was essentially an acqui-hire. Grok had an inference-specific platform, and so over the course of the next 90 minutes, the assumption of the street is we will hear about Nvidia saying, by the way, we have something now that we think is particularly good for inference.
All right, we just want to point out for everybody who's now watching, we are also keeping an eye on Jensen live there on the West Coast at GTC, the first day of that 4-day event. Hey, one of the things I want to go maybe from one company, Nvidia, that is so important to that AI spend, Ed, and build, is also OpenAI, obviously integral to all of this. You've got a great story out today. OpenAI in advanced discussions to form a joint venture with private equity firms, and we're talking about TPG and Bain Capital. Tell us a little bit more about what you found out.
Yeah, I mean, the very simple way of describing this is OpenAI is trying to find a way to sell its products other than just doing it itself. And so in very literal terms, they've set up this new entity, or it actually hasn't closed yet, but they're in the process of setting up this new entity that basically translates into a sales and distribution org so that enterprise companies can buy OpenAI software in a meaningful way. And if you think about why private equity, so the details we've reported, as you said, TPG, Bain, Brookfield, others, they have portfolios of companies. They are private equity, and their job is to make those various companies across various sectors better, improve them, make them more efficient. And so that's a rife market for OpenAI to look at in the first instance. So what we've reported is that those PE names are putting about $4 billion into the entity to get a stake in it. The valuation's about $10 billion. But that's what it is. It's a way for OpenAI to sort of think differently about selling what it does with capital that is not on its own balance sheet. And given OpenAI's sort of intense capital requirements for lots of different reasons, it's a kind of a shrewd move.
Shrewd, but is it smart?
Yeah, I mean, the thing is, like, we always talk about OpenAI and Anthropic in the context of who uses the tool in the end. So in ChatGPT's case, it was a success because of being an overnight phenomenon with consumers. People on their smartphone or on their laptop engage with ChatGPT. In Anthropic's case, they early went after the enterprise customer, basically saying, here's our model, here's what it could do if it was integrated into what it is you already do. And OpenAI's tried really aggressively to catch up. Now, with this joint venture, why can't OpenAI just sell its stuff itself?
Right.
And some of the things that I heard from sources were, well, part of it's jurisdictional. Think about markets like Japan, where there is a very entrenched corporate culture. It can be difficult to do it in a market like that. So bring on people who have expertise in that region and have a specific entity set up to sell into the sectors that are most prominent there.
Carol, did you do Nebius as a gainer today?
I did not.
Yes.
Okay. Up 16%.
Oops.
Right now. Kurt Wagner reporting early this morning, Ed, that Meta is going to pay as much as $27 billion over the next 5 years for access to AI infrastructure from Nebius as it spends aggressively to compete with the industry's top frontier models. Remind everybody what Nebius is. I mean, the stock is just rallying, not just today, but this year up more than 50%. Where does it sit, and why Meta Platforms? Why would they choose Nebius?
Well, Nebius is a neocloud, which is a fancy term we assign to data center operators whose data centers only do AI workloads. In a data center, which is basically a big tin can with computers in it, you can run all kinds of workloads, and data center infrastructure around the world does have various workloads inside it. A neocloud is just infrastructure that supports AI only, and Nebius has an interesting history. It was spun out of Yandex, which is a Russian company, and of course, they want to have continuity of doing business. And very similar to CoreWeave, they are taking on workloads of companies who have their own data centers. Meta's no exception to that. It's just that Meta doesn't have the capacity on its own, so it's looking elsewhere. And I guess making it relevant to Nvidia GTC, Meta, of course, is a very big buyer of Nvidia chips for its own data centers, but Nebius's cloud platform also runs on Nvidia gear. So it's all very much linked.
It all feels incestuous to me. No, but you know what, Ed? It just sounds like some kind of outsourcing a little bit, right? In terms of capacity. Is that what this is about?
Yeah. Like really simply, the state of play for the world in AI is that the demand for compute, the demand for workload capacity is greater than what's built around the world.
Yeah.
That's true of Meta. It's true of many of the hyperscalers. It's true of all the frontier labs. If they had more access to compute, they could do more things with it. Meta is an everything strategy. So I told you it's a really big buyer of Nvidia and AMD chips. It takes those and puts them in its own data centers. It also has its own chips, which we went deep on last week, right? And then the third bucket is they have to go to the neo clouds and say, we need even more capacity. Like, what can you give us right now? And so the specifics of the Nebius deal, it's about a $12 billion deal in the first instance, where next year Nebius says, okay, we are dedicating this amount of capacity just to you. And if you want, you can take even more in the excess that we have 5 years thereafter for an extra $15 billion. And for Nebius, that's highly lucrative.
You know, I almost feel like sometimes I'm playing Monopoly. It's just kind of interesting, Ed, and I am curious about you. We have another question we want to get to on Meta, a Market Watch report. But I'm just curious, as you, like we do this too, the circular financing, but continuing to track all the money that is coming in, going out, the relationships. Do you feel like we as an entity and just the world at large who are watching this build have a good grasp on where the money's coming, going, and it all makes sense? Or is it getting a little funny and unclear?
It makes sense if you're able to decipher webs. And, you know, I always go to the same meme from It's Always Sunny in Philadelphia. You know, some of your audience will get it, but you can just Google it, where there's like pictures on a board and loads of red string, and you're like, here's kind of what's going on. In each company's case, very often it leads back to Nvidia, right? Because Nvidia tends to make equity investments in some of the smaller players, either in its own supply chain or those that are users of its technology for training or inference purposes on AI. You know, Meta equally has done similar arrangements. So Meta has a very large multi-year deal with AMD. And as part of that, it took a very sizable stake in AMD on paper in the form of warrants, right? OpenAI too has a warrants agreement with AMD. The question for AMD in that case is, why did you have to give away 20% of your company in the end to get these people to use your technology? And, you know, we ask those questions often, and usually the answer back is, we want to support the ecosystem.
Hey, Ed, before we let you go, we got to talk about this report from Friday from Reuters.
So that was confidence, right? Yeah. Ed, you felt confident.
Yeah.
Okay. Just
I want to get this layoffs question.
Okay,
out.
let's go.
Right.
Let's go.
All right, Meta plans layoffs that could
Sorry.
affect over 20% of the company. It comes after a year of Meta spending aggressively to bolster what it can do when it comes to AI, or at least the people that it's hired for AI. How do you look at this reshuffling that's been reported by Reuters?
So, you know, that 20% is really significant, right? That would be more than 15,000 people if it's true. Although note, if you have to look every single year where Meta's headcount ended, it has been up and down. Like post-pandemic, maybe this is right sizing. But the interpretation of the street is really interesting. They both think that this is really prudent because Meta is clearly committed to its AI spending. And so when you trim headcount, that protects your margins. But people also recognize post-Block, where Block got rid of 40% of employees citing AI, that Meta is one of the companies that should be able to demonstrate that AI has had an internal impact, a positive impact.
Okay. There we
By
go.
the way, I'm kind of loving the beard and the mustache.
Oh, thank you.
Am I allowed to
Any of our glorious leaders watching the show, they should put it in the fans column.
I am a fan on many levels. Ed,
By the way, Carol doesn't just say that stuff, Ed. She means it when she says it. So
I
appreciate it.
I'm tough. No, I love it.
She wouldn't say it if she didn't mean it.
All right, Ed, thanks so much. We'll continue to track all the reporting Ed and the team are doing, certainly when as NVIDIA continues to have headlines.
Yeah, he'll be down in San Jose tomorrow.
Yeah.
NVIDIA GTC, remember a few months ago, late last year. It was
Am I going to get in trouble with HR
Washington.
for saying that? No. Okay.
I don't know.
I mean, come on.
I want to talk about the S&P 500. We might
okay.
get in trouble if we don't do markets right now.
Oh, let's do it.
Up 1.1%. The NASDAQ up 1.4%. That's the NASDAQ composite. The Dow up close to 1%. In terms of global commodities, specifically oil, WTI down to 93.57, so down more than 5%. You got Brent below $100 a barrel. That's down 3.1%.
It's a weird trade today.
It is a weird trade.
We look at the U.S. equities. Yep, they're higher, but they're definitely off their best levels of the session. However, you go inside the S&P 500 and you do have most names in that index higher in today's session. But it does seem like markets, even though we are in our third week of this war and continuing to kind of struggle when it comes to the energy markets, it's kind of interesting to see how things are playing out.
Well, let's stay on markets as we note that the S&P 500 index slid almost 5% from its last record that was back in January. The war with Iran showing no signs of ending soon. It keeps oil prices alarmingly high, though under $100 per barrel, 62%, 63% higher for both of those, Carol, so far this year.
I just want to mention longtime market watcher Ed Yardeni said that from a contrarian perspective, seeing sentiment heading south just increases the likelihood that we'll get a good buying opportunity at some point, but added that it may not work now. So let's see.
What's a good buying point?
That's the million, trillion, billion dollar question.
And when?
Let's see what our next guest has to say. Joining us is Racquel Oden. She is U.S. Head of International Wealth and Private Banking over at HSBC. She's here in studio. Nice to have you here with us. There's a lot coming at investors. The war in Iran, we keep trying to figure out when this might wrap up. That is the big question. How are you kind of factoring that in? Are you not yet? The energy market disruption, it feels like things are cooled down, yet we are still way up from the start of the year when you look at the prices of oil. So how do you assess all of this when you think about investment management?
So thanks for having me.
Yeah.
And you are spot on. I think right now, one of the taglines I go by when I talk to our clients is, in the short term, markets follow headlines, but in the long term, markets follow corporate earnings. And you have to separate the two. So in the short term, we're going to continue to see this volatility, as we've talked about. And that is just a reality of what you're seeing from an S&P, NASDAQ standpoint, that you're saying, like, today was down, it was up. But in the long term, the reason why I still feel bullish and confident on equity markets and the U.S. as a whole is corporate earnings is still predicting 13 to 15% overall earnings this year, right, in 26. And so what you want to anchor yourselves to from a long-term standpoint with our clients is really focusing on that. Now, you've talked about it. There is going to be a more focused on value over growth. And so you're seeing that in the tech sector that you're talking about right now. So the Mag 7, I consider that a repricing opportunity.
And you are calling or thinking about 2026 as kind of the year of value, right?
Year of value.
Yeah.
Year of value, right? Because you're right. The market is repricing some things right now. So that's why you're saying it's the year of value. So when you take a look at, we use tech as an example. We talked about the Mag 7. That's getting repriced a little bit, as we're going to see this year, but it's the forgotten 493, right? The widening out of that sector. That's going to be where the value opportunity lies, right? If you think about that, if you take a look at the, I say 493, outside of the Mag 7, last year their earnings were something like 6%, and they're predicting this year in 26 closer to 15%. So if you take a look, the Mag 7 will come down slightly to the 14-15% range, and the widening of that sector really says there's value within there that we should be tapping into.
So let's talk a little bit about the consumer and the idea that the consumer powers this economy, and if a consumer is paying more for gas, that might cause the consumer to pay less for other things. Since January 14th, gas prices are up more than $1. Or exactly $1, roughly $2.77 back on January 14th, $3.71, so 33% higher right now. How does that affect earnings if consumers are feeling strapped?
So corporate earnings slightly different from how the individual is feeling, right? And so
but I mean,
completely agree with you.
And bear with me here, but there is this connection where if a company has to pull back from advertising as a result of earning less revenue, then that affects, a Mag 7 company because their top line is dependent on advertising.
Yeah, I think over time. So I'd say I always tell it's a tale of two cities. The story of the individual is slightly quite different from a corporate standpoint. And you're absolutely right. Gas prices are higher. We still have not resolved tariffs as we think about it, right? We're also looking for what will the Fed do as it relates to rate cuts that are coming up. and AI. Like, we can't forget that and what that means to the labor market. So these are real things that impact the individual. And so when you think about that, the importance of that is the alliance around what sectors to focus on and where the rebalancing comes in, right? Because there are going to be sectors that are very much more impacted by oil or AI or specifically tariffs. And that's why active management is where we're really leaning into and figuring out what sectors you need to pivot to in this volatile market that we're experiencing in the short term. But again, I try to anchor us back on the corporate earnings piece and the importance of equity markets right now and what that means.
I get what you're saying, and I get what you're saying when it comes to earnings growth. I think about top line growth, and I also think about pressure on margins, especially amid higher energy prices. And so how does that play out if companies potentially are feeling pressured? We still don't know. Again, tariffs are once
Still
again
unknown,
an unknown. I do think about pressure on margins, and then how do they make it up? And if they're able to use AI to do something, do they let go of workers, or do they not hire as workers leaves? And then that plays out into the economy, and that ultimately, does the economy become the market?
Yeah, no, you're spot on. So I think what I'd say to that takes a longer time to show up in the economy overall. But what you just pointed to, the AI, the labor markets, like that's what we're seeing, the unemployment rate. Like in the last unemployment report that we saw, while we were higher than estimate, it was concentrated in healthcare. It was very concentrated, right? So it wasn't a widening of a labor market, and that makes you dangerously nervous because that really means it's only healthcare that really tipped over, the job report, the last one that we received. So labor markets absolutely would be impacted by AI and, let's say, this inflationary thing called what's happening with oil prices, and then also potential the unresolved of tariffs at this point. So the small business owner and the individual are absolutely feeling differently right now.
Racquel, is there any conversation within your world and with your team over at HSBC where there is a thinking that even if we ended this U.S. war in Iran tomorrow, that there's still a region that has been impacted severely and a country that has not liked the U.S. for decades, and that somehow lingers and creates some volatility potentially for us going forward, whether it's in the energy markets or just our life in
so
general?
I think as we all look at this, there's always the geopolitical piece of this that would impact lots of decisions, right?
Yeah.
And so we always have to have an eye on what's happening outside of the country, and specifically from a geopolitical standpoint. And we would say what keeps people up at night, it's that unknown, right? And so whether you say it ends tomorrow or it may not, right? I mean, that's also a very big unknown. So for that reason, you have to figure out how do you get oil prices back under control, right? So you have to assume if it doesn't end tomorrow, what does that really mean? And what does that mean for the price at the gas tank as we think about individuals? And what you're seeing in that price increase, it happened in such a short period of time too. It's the shocker, right, that you weren't planning for it, and it went up within a week, up 20%, 30%, and so that's a lot for an individual consumer to take on.
And maybe we'll find out more on Wednesday, hopefully. But
Exactly.
it's a shock that the Fed maybe didn't necessarily see company.
And then you got to watch inflation. That's the important thing. The Fed's going to come in and make a decision, and it's a hard decision right now as you're taking a look at what's happening from a market standpoint. As you just said, pretty resilient, the markets, but at the same time, individuals are feeling pain, right? So the question is, does the Fed make cuts? I think, right now, it will be important to see what happens on Wednesday.
I can't imagine the Fed cutting rates. I don't think anybody at this point.
I don't think anybody's anticipating that, but I think people are hopeful for that. But I think for us at HSBC, we're actually saying no cuts this year, quite honestly. We're taking a very extreme view on this one.
I like this.
I like this.
Or Anna Wong has talked about four rate cuts
four
this year.
cuts, so 100 basis points.
So
maybe it's somewhere in the middle.
It's a wide range right now.
As of last week, traders were not even pricing in one. They were pricing in 24 basis points, so not even one.
Yeah,
as of
right?
last week, yeah.
It's just.
But you also have a new Fed chair too, so there's a lot of differences.
Not yet.
Maybe.
Well, very soon.
Talk
Very
about
soon.
unknowns.
Very soon.
I have learned.
I don't know if you were around on Friday and you saw that press conference.
Yes, correct. So all those factors then says we can't always predict what's going to take place here, but the Fed plays an important role, right, to answer that question. Yeah.
All right, we're going to leave it there. Thank you so much. Really appreciate it. Racquel Oden, she is U.S. Head of International Wealth and Private Banking at HSBC, joining us right here in studio.
We wanted to flag a conversation that Bloomberg's Francine Lacroix had on her series, Leaders with Francine Lacroix, which airs on Bloomberg TV and now, Carol, can be found as a podcast.
It can indeed. In the first episode, Belinda French Gates reflects on the choices that set her path from Microsoft executive to philanthropist and now founder of Pivotal. She shares how values-based leadership, resilience, and the courage to embrace the next day, as she says, have guided her through change, power, and public scrutiny.
I think sometimes people stay too long because their ego's attached to the job or because they're too afraid to make the transition. And they may not even realize they are afraid, but it does take courage to make a transition. And so I try to say to them, look, there's something beautiful on the other side. You may not know what it is next. You may be afraid, but when you make the transition, you're also making room for what might come next for both you and whomever's to come behind you, right? And so I think as leaders, it's our job to understand, when is it time to go? When do we need another leader in this role?
How would you advise is it up to the people that surround them
100%.
To say, like, look, hold on, think about what you're doing, or is there something that they need to think about from day one?
I think it's both. I think they need to lay out for day one, what are they trying to accomplish? What happens if they don't get there? What is their exit ramp for themselves? Do they have a time limit? Like, if I get X done by year 5, but if I don't, will I leave? So having a plan going in, and then they have to surround themselves with people who are truth tellers and who they will truly listen to, right? Because once you get into a position of power, people are always going to tell you, you're doing well, you're doing great at this, aren't you fantastic? You have to have truth tellers around you, and you have to be willing to listen.
I feel like that's the hardest thing. It's making sure that you're not in an ivory tower where people say you're wonderful and actually you're doing things that are wrong.
Absolutely. I worry about that for myself. I worried about that at the foundation, like, who's not telling me the truth? And I knew there were a lot of people who weren't, but you know what? I could find the 2 or 3 that would tell me the truth about my leadership or something they didn't think was right about the organization. And so I had to make that safe for them. I also, outside of that, I'm very close to my family. And so my 2 younger brothers, my older sister, they will tell me the truth. And they never, ever let me think that I'm all that, especially my brothers.
All right, that, of course, is Melinda French Gates. She is there with Bloomberg's Francine Lacroix. Catch the full conversation. It's the first of 12 episodes in the first season of the podcast version of Leaders with Francine Lacroix, which you can find on your podcast feed and on the Bloomberg, and, of course, at Bloomberg.com.
Let's take a look at some stocks right now. In the equity indexes, the S&P 500 up more than 1.1%. Let's round that up to 1.2%. Carol, the NASDAQ composite up 1.5%. The Dow up 1%. You do have 409 stocks moving higher today. It's a broad-based gain in the S&P 500, only 93 stocks moving lower. As far as commodities go, WTI down 5%. to right now $93.80. And we are seeing Brent at triple digits still, $100.60 per barrel, but down about 2.5%.
We're also tracking a GTC event there in San Jose, California. Of course, Jensen Huang has been speaking at the event. It kicked off today. It's their big AI annual event that they do, 4 days, and this is the first day. We did see shares of IBM kicking up higher, up about 2.4%, intraday high. This, as IBM is said to be working with Nvidia on data processing. So Nvidia, we're going to track those headlines and bring you any of them that are certainly of import when it comes to what the company's up to.
It's just day one of GTC.
Day one.
But that's where all the news happens.
It is. That is very true. All right, stick around, everybody. Stocks on the move when we come back on this Monday.